So I'm going to go ahead and break down my ES trade. I'm going to break down the higher time frame, my exact thought processes, and also what other assets I was looking at. Because I was trying to trade YM as well, trying to get in a short on that, and it did in fact miss me, and I ended up pivoting my asset selection to ES. So just to show you on the Discord quickly, where I did mention this. So on ES here, you can see if indices get a breakdown. This was sort of my framework: daily FEG equal lows. Obviously, I'll show you this on the chart in a minute. We have a nice previous days, I should say, high sweep, and then I wanted to see these equal lows get ran for. You can just see a quick breakdown of what I ended up doing with a sort of proof of screenshot. So let's go ahead and talk about this. So indices have been very heavy, okay, for risk on assets. Trump has produced a lot of uncertainty in the economy, which has basically driven risk on assets to the downside. Okay, so indices fundamentally have been down, but also just based on the technicals, you can see the daily is clearly showing lower lows and lower highs, and bearish arrays being respected. So I'm not really going to pivot my stance until we break some sort of major daily trend, right? So going into what exactly happened on this specific day, first of all, I've identified the fact that we have a Monday high of week. Tuesday's gone ahead and pushed lower. So I know already that we've got the high of the week on Monday and the low of week on Tuesday. And if I'm anticipating a bearish week to form, we know that there's a very high percentage chance that the low of the week is going to form on a Thursday or a Friday. So I know that this low is very likely to get reached for. Another idea that I pieced together with this is we took out previous days high here. I know that there's a low percentage chance that we actually reach both high and low. Don't get me wrong, you can still hold for this lower target, but that's basically why I didn't get in here and TP all the way at the bottom. It's because I know that there's a high degree chance that we are just going to reach for either previous days high or low. Both of those statistics I mentioned in prior videos that I have uploaded, they'll be titled like this concept has an 80 to 85% success rate, and the other one's at 78%. I can't remember the exact title, but anyway, daily wise, tap the FEG. Another really clean thing is that we've filled this entire FEG. So if we are going to see bearishness away from this, right at the time of obviously when it gets up here, then it should have pretty much fulfilled what it wanted to do, if that makes sense, and we should see a run lower. If I jump down to the 4-hour, you can see here it's a very nice, a very nice turtle soup. Okay, let's mark this previous day's high. Right, let's go a bit lower because it doesn't really help us. So the other key idea, okay, is it was CPI on this specific day. Now, before I jump down to the 15, you'll see exactly what CPI did. But typically, right, CPI does one of two things. Number one, it's either going to go and sweep some sort of liquidity and then create sort of the high of the day, or it's just going to rip. And typically, if it rips, then you don't really get an opportunity. So we get the other one, which is where we sweep some sort of major liquidity, and typically we put in the high of the day. So hourly, I just want to sort of show you we have a consolidation here. We understand that there's tons of liquidity building up in this range, and simply put, this is just a pierce of one side of the range and then back into equilibrium, which is basically the idea behind this setup. If we go down to the 15-minute now you can get into the more juicy intraday stuff with regards to the cycles, right, which is obviously what you guys know I use to frame my setups on the lower time frames. So we've taken out previous day's high. You can already see the news injection here, right? So this is 12:30. So just something to note here, right? Typically in the UK, okay, CPI is at 1:30, but because we've had the New York change in hours, everything gets shifted to the left for us, right? So anything that would typically happen at 1:30 will happen at 12:30, and so when I talk about what this cycle is, which is a New York reversal cycle, you guys will know I always mention 1:30. Obviously, the hours have changed here for New York, and we don't shift, so UK doesn't shift till the end of March. So for any videos that I talk about this, just to avoid any confusion, when I mention the New York reversal cycle, yes, the high will be made between that 12 to 1 period, in only when we're sort of in this environment where New York's hours has shifted, but London's haven't. Okay, hope that makes sense. So we have Asia here, and we had London run higher to take out previous day's high. Something I noticed was that we created a very clean area of equal lows right here, and my thought process was, cool, I'm bearish. I want to look for the high of the day to get made. Once the high of the day has been made, I then want to look to just get on side with the order flow that's going to likely push back inside of this consolidation and to my liquidity target, which is basically liquidity of Asia and London, right? Or equal lows prior to that as well. So framing this whole idea, we're using an NY reversal cycle. This is where the high of the day gets formed, typically, like I said, at 1:30, but this is the delayed hours. So this is now looking at it from 12 to 1. But typically with indices, it's just a news release. So I have like 3 cycles for indices, and this is just one of them. So right off the bat, a couple ways you could have approached this. You could have just waited for the 15-minute to break through here. If you just waited for a 15-minute order block, you could have got in on the tail end of this, rode this lower. Okay, I'll show you what I did. So I actually scaled out one more time frame. I think when people go for entries, they actually dismiss the fact that you don't need to enter on the 5 or the 15-minute. You can use those for potential stop refinement if it makes sense. However, if you really think about this, right? So let me just pass back here. So you think about what's happened here. We've taken out liquidity. We understand that smart money has entered into short, right? Paired their orders with buyers above this high. Liquidity has been taken. They're going to look to distribute their positions to what? Okay, opposing liquidity. On the hourly, we've had a clear change in state of delivery, right? We were clearly bullish here, and we formed a bearish order block. Once we form a bearish order block, right, we know with a high degree of certainty that now we're going to go ahead and turn around, right? If the context obviously makes sense. So I was then looking for the following hour to basically retrace and then expand lower. And so I was looking to position myself inside of sort of the post 30-minute 1 hour candle, pretty much, right? Also, if we go on the 4 hour, I'm pretty sure this was the following 4 hour candle as well. Okay, so this is quite a popular candle that people like to trade in. It's sort of the 30 minutes after New York Stock Exchange opens. So again, following 4 hour, again, anticipating the same thing. We've had a huge rejection away from here, and I want to see if we can go ahead, retrace a little bit, and then drop. Okay, so my entry was at this level, right? Let's just break down again as well exactly what I did lower time frame. So that was my entry level. I noticed, cool, this lines up with the 15-minute immediate rebalance. I did also see the 15-minute order block, which was the area I just mentioned. I was thinking to myself, cool, we might not even get there, okay, because we could just basically rebalance this level and then drop. So I understood as well in terms of the 50-minute that all of this area had been rebalanced, and there was no sort of fair value gaps, anything like that being left. If we go on the 5 minutes, well, you can see how we sort of ever so slightly tapped this area and dropped. So my SL was positioned above this high, right? And I just remembered I need to talk over YM as well. I'll do it in a second. So this was the hourly order block, right? Which was my entry. SL was at the this 15-minute high, and I was targeting this liquidity area, right, for a 2R. Ended up taking the 2R at London's low. It does go on ahead and reach this, which is cool. So let's think about this now. If we go to the 15-minute, we have 4 15-minute counts that are about to print, right? So let's have a look what happens. So we have number 1, goes ahead, taps my entry, also reaches for the 50-minute order block. If we go to the 5-minute here, we have a 5-minute order block nearly forming. If I play the next one, sorry, I need to drink some water. So now the 5-minute order block has formed. Typically this doesn't have to hold, like this still could get run out and then drop higher. At this point my SL is still in the same place. If I play the next 15-minute, then we start to see some displacement. Now I'm really looking to sort of move my SL lower. I mean, I did it before this anyway, but yeah, but by this time I'm at break even. I'm slowly sort of like reducing my risk as price runs in our favor. And then I was looking for a scaling opportunity at this FEG, right? Which is basically where price is running in my favor and I'm looking to enter another position to sort of maximize my return. And essentially keeping the risk off the table, because for example here, we're at break even now on this first position and I don't have anything on the table. So where I risk, let's say if I did risk another 1%, I'm never going to lose more than 1% on this entire trade idea. So you can see I ended up getting out here. We tap this area and we drop again, right? So if you think about the hourly candle that I traded within, if I just replay this, I've traded within this hourly candle. You can see perfectly it's played out very nicely. We've got in on the wick high of the hourly candle and it's ran lower, TPing at the low. Okay, just to show you my thought process on YM as well, because I was trying to catch this. So again, same bias, we're clearly bearish. Okay, on YM we hadn't actually reached for previous days high, so I was like, cool, we actually have a very high chance of reaching for previous day's low. This is very much weaker as well. If you flick between these, you'll probably be able to see the SMT. Right, there you go. So this high is taken out here. This high, oops, sorry, wrong asset. The same corresponding high, I haven't given it specifically, hasn't been taken out. Right, yeah, it's this one here. Okay, 10 length of March 10 o'clock. Length of March 10 o'clock. Yeah, so we know YM was weaker in the first place. You can also see how it's a very similar idea, but I knew that this pair was more aggressive to the downside basically. So we'd fill this FEG for our order block. It's literally the same framework, complete same framework, right? And this really did melt off. Again, NY reversal cycle, I wouldn't have only targeted this area because again, we have the statistics on our side here to play this level down here. We formed a 50-minute order block. I don't execute before 9:30 or EST, right? 9:30 or the start of AM session. We tag this and then we just melt. So on the 5-minute, after we melted, right, I was essentially looking for, I had a limit on this FEG up here. As you can see, we just didn't get tapped and yeah, we just absolutely melt off. So after I didn't get tagged on this and we basically ran for these lows, it's quite funny, right? This is like what, 140. If we go to ES, you'll see ES had barely even moved at this point. We're still up here. So where YM had already reached for the same corresponding target, right, at 140, ES was all the way up here. So again, it sort of alludes to the idea that playing the stronger asset or the weaker asset in this respect is a lot better, because you're going to get a very strong move out of it if you're confident in the direction. Again, I was just unfortunate to not get tagged in on this position. So yeah, that's basically everything I wanted to talk about. If you guys did enjoy this, then yeah, be sure to give me some feedback. Let me know what doesn't make sense, what does make sense. I'm gonna drop my, as I always do, my 3-step daily bias framework in there. You should get a picture of how I'm forming things more from a sort of like PDF perspective. So yeah, hopefully you guys did enjoy that, and I'll see you in the next one.